JB here. Hope I was doing outstanding. Wednesday, June 25th, 9 a.m. Talk really quick about the market. Some names I'm looking at go from there. S&P futures in the green. Um, Kind of been somewhat flat to mix this morning, and then up about a 10% after the Monday and Tuesday rally. S&P is up 2% on the week. Who would have thunk it? Right over the weekend, it was Armageddon. Right, financial Armageddon. Markets were going to tumble. You're cringing if you're in calls, couldn't sleep. If you were in the puts, you were already counting your money, right? And then I mean, just amazing how the market has worked. That's why, like I always say, to try and keep an open mind. I'm not, if you read my posts or my rants over the last couple of months, I'm not like an Uber bull. I'm not it's a perma bull or whatever you kind of call it. But like, I mean, if you look at the historical time frame of the markets from inception, markets go up. That's the majority of the time they go up. So if you're majority of the time bearish, it's usually not going to turn out well. Although the one or two or three times that there's those massive sell-offs, like we saw in April, if you time that perfectly, obviously that can make up for a lot of mistakes of being short, right? But I mean, you got to be perfect on the timing, otherwise you're just demolished. So I'd sense my sarcasm when I post things. I mean, I keep talking about all these different events just in the last 6 months. We only have 4 more trading sessions in the first half of the year and the second quarter. Um, I mean, and egg prices. I mean, who remembered the whole egg price fiasco? We thought, oh my gosh. I mean, then you have DeepSeek that was going to destroy the AI market, which had been the big boom for everything. And war, tariffs, inflation, recession. I mean, there's been how many recessions already this year, right? I mean, so uh, we'll see how this all plays out. I don't like to just sit there and be naive to the possibility that there's at some point there's gonna be a pull, right? And to me, it almost concerns me more when there's no headwinds. It's like you read stuff this morning, and I mean, we do have the tax bill going on. You have the NATO summit. Fed Chair Powell speaks again today. I mean, he's just going to do the same stuff he did yesterday. He already had the prepared remarks yesterday morning. And then outside that, we have Micron earnings after the close. Say FedEx yesterday after the close. Nothing crazy. Strong earnings, just weak guidance. I actually might play for a bounce. And then Friday morning, we have PCE data. So we'll see how things play out. Also, I mean, who remembers the whole dreaded inverted yield curve, right? When you're getting a better return on shorter dated treasuries than longer dated ones, right? So uh, that's gone, right? No recession. So that's predicted 37 of the last two recessions. And then yields keep ticking down. So hopefully yields keep melting a little bit. The odds of Fed cutting some rates happens earlier, sooner than later, at least just to get it started again in September, you would think. And then we'll see how things play out here. But hopefully more opportunities to play some names on longer term, right? I mean, that's where I do best is when you have names that perform better longer. You can hold things longer as opposed to worrying about what next headline is going to pull the market. It's going to be China tariff news, China U.S. news. It's going to be more trade deal news. So if we can get away from those headline driven events and more into some like the macro side, right? Hey, the economy's doing well. Let's find some names that are going to do well. I think that's the best kind of environment, at least for how I trade. All right, so now quick individual names. At the open yesterday, Lemonade did what normally did, gapped higher for a second, then the bears tried to pressure it. I didn't want to lose the rest of the profits on my well, I still have the July 18th calls, but I locked the last of the July 11th calls in for nearly 100%. Those are closer to the money and more expensive. So, to me, Lemonade has had these instances where it has huge sell-offs for no news catalyst. It has the flip side too. It has some huge upside moves, but I didn't want to see the premium come out of those. I'm already riding them free, so I locked those in. I'll just hold the July 18th for now. Those are freebies. And then if it shows some strength today or tomorrow and finally breaks over 50, I'll look for some more strikes to play for that longer day to move, maybe 75 plus in the coming months. That's Lemonade. Only down 1% yesterday. I say only because typically moves are pretty substantial for Lemonade. Roku added some more strikes too. And some of the thought process here is when I was looking on the Monday with the Amazon Roku news, was it last Monday? Uh, it was up here at $84 or well, $82. Now it's at $84. That's where it was last week. And I was looking at July 100s to July 95s, and they're very expensive. And now those premiums have kind of come out, but the stock is still elevated. So to me, the risk reward is a heck of a lot better than when it was on last Monday. So in lieu of trying to average on positions or get later strikes, I'm like, those 95s look interesting on a risk reward basis. So I think it trades north of 90. You look at that 82, I think it's 82.40 handle from back in March. That's a big spot. So if we're over that, if it can hold gains here today and not do what it typically does when it gaps, I think it heads close to 90 before the week's out. So that's Roku. Um, I finally back into the serve. Similar to Roku, I was looking at strikes, the 13s, the 14s last week, the week before, and then I was looking at the 13s yesterday morning. And once it, was gapping higher, but not too crazy. Um, and I'm like, wow, these look interesting on a risk war basis because I have plenty of time for it to do one of its moves back up to 13, 14. And I think if it could break over 14 finally, I think it hits the 17 bucks in the coming weeks. So don't be surprised if I add later dated strikes on serve. Really love this story. I mean, I don't have time to do a longer rant on it, but I always, over the years, talked about this last mile. That's like a huge hurdle for some of these companies. And here's a service that's going to help tackle that. Already have partnerships and with Uber. Scale. It's still in the slow process of scaling out. But when I say slow, it's probably going to be exponential once it really starts to get going. And next year is like the big year for them. All right, so that's serve. A PayPal over 74. Well, it's actually 74.04 right now here in the pre-market, up another 2% yesterday. Hopefully, the premiums can keep coming into the calls. I can lock some of my calls out to cover costs and ride the rest. Again, still boggles my mind. You see all these other names running on stablecoin, and here's, I wouldn't call it the OG, but uh, not only that, its business is doing well. So surprised it hasn't traded higher. 76 and change. That's the 200-day moving average. Still eyeing pool here, was up 2% yesterday. I didn't want to put too much risk on, but now it's up here at 300 bucks. The 50-day moving average is 301.23. It's not the most liquid name, so but at the same token, I mean, I was looking at those 330s yesterday and I kind of passed, and let's see what they are right now. I mean, the 320s look interesting too, but I mean, it's tough to tell the spreads because it's 5 cents by 195. Maybe some 330s today, we'll see. And not large open interest, so makes it tough to get in and out. Excuse me. So that's Pool, still watching that one. And the thing with Pool, as rates go down, I was saying it yesterday on the rant, it's bullish for folks remodeling, right? So a lot of folks, if in lieu of trying to move with rates being high, they maybe you take out a home equity loan or you do some other kind of financing for a pool or what have you. And as rates go down, that should just help and just get some folks to say, hey, maybe I'm not going to move. I'm not going to sell my house. I'll just bring my wants that I want in a new house to my current house. So that's cool. And then two other names here. I just posted in the chat room AVAV. I don't have an issue with Spruce Point Capital. It just seems like he's in over the years. I could probably list, he's probably done like 70 or 80 shorts, maybe 100. And it's like 30, 40, or 50% of them. Well, I would say 50% are names I'm in. And a lot of them come out after I'm in. And, I bring up Wix.com. AVAV is another one, right? It's one of my top 5 stocks. I have to go look. Maybe it's 2016, 2017. No, maybe it was 2018. I think the stock was 50 bucks or so. And I look, and he's shorted. And then you read his thing. I'm like, it almost gave me pause back in the day because that's 7, 8 years ago. Uh, but then you see, obviously, the stock is leaps and bounds where it is now. So they reported earnings after it closed yesterday. It was kind of like a mixed bag. I mean, great report, but then maybe the guidance was a little weak. But I mean, some of the issue with ABV has always been their backlog. But you have to think you have, a couple catalysts, right? So you have the earnings, you have the NATO summit, you have the fact that these European countries are going to start to. Already, Germany has ramped up their defense spend to historical levels. So you have, well, I shouldn't say historical levels, but maybe within the last 50 years. So you have to think it's bullish. And then you take a look at the stock all the way down from 230 in November. I think there's an opportunity to play for a bounce. So that's ABAV. Don't be surprised if and the only issue, it has monthly strikes. So a little tougher to play for earnings bounce. But if the premiums on the 220s, 230s come down, don't be surprised to add some strikes there. And then last but not least, here's FedEx. And another name. I mean, this one has been kind of, I wouldn't say taking a woodshed, but it's back-to-back earnings. The previous ones, the stock is traded to the downside. And then you have another had strong earnings, but then their guidance a little iffy, I guess. But I mean, you look at the stock where it's trading and it's down here at 218. I wish it was down at 210. I think it bounces. So I might look for strikes either for this week or next week to play for a move over 230. And that's it, folks. Let's have a great day. I'll be back on audio later. Rock and roll. Oh, VKTX. VKTX. I mean, this has all been coming. They announced the starting of their phase 3 study. They also just kind of put a snippet in there for their venture phase 2 data for their oral GLP-1. That's going to be out in the second half of 2025. I saw the wording in the press release and my stomach dropped for a second. I'm like, did they just push back the release date of this data? Because that's some of the premise of me adding those August strikes. But I mean, August is the back half of the year. So I don't know if it wasn't expected, I guess, to give more clarity. The stock is, well, it's right here. It's pretty much flat. It was a little higher. The thing is, the study's already over for the phase 2 oral data. So it's just a matter of them tabulating it and whatever. So, I mean, it could be out any day. Well, actually, maybe it ends. I think it ends the first half of the year, and then the data gets tabulated. So it's either at the end of July or the start of August. So I'm going to try and do some more digging to see if that changes. I mean, we'll probably find out in 20 minutes if the premiums hold up in the August strikes. Then the data, the date hasn't changed. If those come down, then obviously there's been a change in that. So nothing you can do about it, right? So that's that. Let's have a great day, folks. I'll be back on audio later. Rock and roll.